In this video, I'm going to talk about my 50K bet on Palantir Demo Day. I'm going to use a fish analogy to demonstrate my thought process. So we have some fish here. As we scan through the fish right here, we're going to put 20% for the head, 60% for the fillet, and 20% remaining is for the tail. So altogether, this is a 20-60-20 distribution. So if we cut off the bottom 20% of the fish, the tail, and the head 20% right here, we're left with the fillet portion. So here is a fillet. The fillet is what we get at the restaurants because who's there to eat the tail and the head of the fish, right? And there are many reasons for that. Because for the tail portion right here, the bone to meat ratio doesn't really make sense. You're spending a lot more time taking out the bones and the meat is minuscule as compared to the fillet portion. Because if we look at the cross section, the bone is much less than the meat in the fillet portion, right? So it's more meaty. And then lastly, we look at head. The head is full of bones. So the only meat you get is probably just this like 20%. Of the 20%, it's so hard to eat. You have to go around all the gills, the cheeks. The amount of bones there is probably more than half of the head, right? So how does all this relate to my Palantir call option play? Let me explain after I wash my hands. Welcome back, mindful investors. In this video, I'm going to talk about my Palantir play of how I turned this 50K into 200K plus on a play that maybe lasted like 3 weeks in total. So let's get started. Okay, here's a report from my call option Palantir play. All the contracts was just for one date, February 19th, 2021, $30 call. For my play here, there are 3 main phases. Phase 1 is initialization. Palantir Demo Day was stated for January 27th after market. So I had to initialize my position 3 weeks before, approximately 20 full days before. As we can see here, on January 7th, I bought about 200 contracts. And a couple of days later, over the weekend, I thought about it a little bit more. I want to add exposure. I added another 183 contracts. But I actually just wanted 333 contracts exactly. Somehow I ended up with 383. And there's a couple reasons for that. I added another 50 contracts right here to dollar cost average down. Because right here we see the average price was at $1.68. On that same day, I also bought at $1.80 and $1.93. So when the stock dropped like 5%, almost in the closing hour of that day at 12:18, I added 50 more contracts to dollar cost average down. So why did I choose 333 contracts? There are a couple reasons for that as well. As we can see here, the call option is for $30, right? I'm going to pull up my calculator right here. If we had 333 contracts times $30 call options times 100 shares per contract, we will have close to $1 million exposure in Palantir Demo Day. And that was my mindset. I wanted that much exposure in this play. So that's approximately 333 contracts. Another reason is that if we look at the dollar cost average I did right here, it averaged to about $1.59 for all my contracts. So $1.59 times 333 contracts times 100 shares per contract equals 52K. So approximately is within my 50K limit. That's the amount I wanted to risk. So after this date, my phase 1 was completed. My initialization was done. There's no more buying. All we're doing is waiting for catalysts and waiting for the demo day. So I patiently waited for demo day. And this happened on the Friday before. Demo day was 27th, on the Friday before was 22nd. In the morning, around 10:30 or so, I sold 50 contracts. And that's because I was overexposed. I just wanted around 50K exposure for 333 contracts, but in total I had 383. So that's when I sold off my excess exposure of 50 contracts. I mean, these 50 contracts are still profitable. I bought them at $1.59, now they're worth around $2.15. I sold some, I capitalized on around 4K of profits, but just a couple hours later, we noticed a huge spike. The stock just went all the way up. It went 15% in midday and another like 5% more to close off the day for 20% gains. This happened in the middle of all the GameStop AMC Express short squeeze. Somehow it's squeezing Palantir as well. So being the mindful investor, you have to take some profits off the table. And the way I did it on that day was something called step-up selling. So with my 333 contracts, I decided to sell off the 33 first. So 33 contracts executed around 4:30, that's approximately 3 times my principal of $1.59. And then what I did was this step-up selling. I placed all these mines at 25 contracts each right here for a total of 100 contracts, and the price differential was 25 cents each. Since the stock went up in that projectile and closed at the high, it hit all my mines. It hit all these contracts and I sold off another 100 contracts. All these were more than triple its value. As we can see here, if we just waited another 4 hours, all the 50 contracts before, we could have tripled its value. But as I always say, a win is a win. So right on this date of January 22nd, all these profits turned to about 50K. But that's not the end of it. On the day before the main event, it spiked another 10% or so. So the contracts went to about $7.50 to $8. That's when I did another step up selling. So I sold another 75 contracts right here for another 45K profits. Okay, if we look at the contract in detail, on the day following the event, there is another short squeeze. It squeezed the stock from 35 to 45 within an hour. Just like that. Just like that, it went from $10 a contract at a peak of $16 right here. And as I always say, you can never time the top or the bottom. All you can do is dollar cost average. So if I could have held my 333 contracts at $1.59 and sold off at this very, very peak, I would have made the 10x on the 50K. Hindsight is 2020. No one can pick the top or the bottom. So what I did was dollar cost average in and out, and this was the result. The highest I was able to get was at $9. That's still like 5x my principal. So I'm quite happy with that. Alright, so that's when I sold off the remainder of my 125 contracts for another 50K. In total, I put in 56K and I got 161 out of it. So 56 to 217 is the final tally within the 20-day time frame. So far, this is the biggest win of this year. Hopefully there's more to come, but I'm going to continue and talk about the phase 2 and the phase 3. Phase 2 was a waiting period. The waiting period wasn't easy because as time went on, I think on this very day right here, on this day, January 15th, there was a spike in the contract prices. It went from a low of $1.60 all the way to $3 within that one day. It was a huge temptation to sell because on that day, ARK Invest said that they bought like $14 million in shares of Palantir. So that brought a lot of confidence in the stock. So people chased it up. It chased up maybe 15% just to start off the day because Cathie Wood's added position. I didn't sell on this day. I didn't plan to sell because of the whole fish analogy. My plan was to eat the fillet. If we look back on hindsight, we started off at $1.50 and the peak was at $15. So there's a 10x. As we mentioned before, we don't want the tail nor the head. We just care about the middle portion, the 3 to 5x. If we can consistently eat that portion over time, then we'll be really profitable on these home run plays. I call these home run plays for a reason. I didn't cut things off at 100% gains at $3 right here because of this simple reason, the risk versus reward. What I was willing to risk was 100% of my 50K. That was my whole risk. If I sold everything, once it doubled in value, then I had the 1-to-1 risk versus reward. But we call this home run play for a reason. 3 to 5x is my typical range. Some people may shoot for the 10x, some people just like to double up, but my range is 3 to 5x. And there are a couple of reasons why I chose 3 to 5x as opposed to holding it on for the 10x. It's because of the bet sizing. If I only bet a couple $1,000s, I'll just hold on to it. Hold on to it until after demo day. No matter what happened, it didn't matter if Cathie Woods bought it and it spiked 100%, I wouldn't care. It didn't matter if the short squeeze happened and it jumped another 3x, I didn't care as well. In the phase 2 waiting game, there's a lot of temptations. And since my bet was 50K, it's a little bit bigger than my average size of like 5K or the 10K vaccine play, it's like 5x bigger. So at the time of making this play, my portfolio was maybe like 700K. So this 50K was less than 10% of my portfolio. And I was fully okay to lose it all. But as I mentioned, this is still a sizable bet. So I have to take profits along the way. I didn't take it at the first 20%, the tail portion of the fish, because this represents a doubling. So from $1.50 to $3, I didn't care about it. Once it got to the $4.50 range, I started taking things off the table. If we look back at the table right here on January 22nd, the 133 contracts I sold, I raked in more than 50K. That 50K itself already covered my principal and more. So everything that's left on the table was profit. This was another strategy I use all the time, is letting your winnings fly. So even if the 200 remaining contracts I had goes to 0, I was still profitable overall. Another thing to note is that my bet was initially for the demo day, right? But as we approach this main event, I sold off so much position that at the event, I only had like 125 contracts in exposure. Of my overall 383, I only have 1/3 left. My whole play itself was playing on emotions, was playing on the hype. So during this hype up to the event, I sold off 70% of my position. Like ultimately this event didn't even matter. I could have sold off everything before the event and got my 4x. And I didn't even have to watch the event, even though my whole play was for the event, right? And there's a reason why we take things off the table before the event, because the hype level goes up. Right before the event, the hype level is its all-time high, so they need to release some huge partnership either with Elon Musk, with Joe Biden. They have to ultimately hit the home run on the event. And at the event, Alex Karp, the CEO, didn't even show up. And I did watch the event. I found it's a little bit technical. The guys there aren't well rehearsed. They're just reading off a script off the screen. It wasn't very interactive. But at the time of the event, all this doesn't matter because the pressure is off. All this is house money, so I'm just watching the show. Imagine for a second that I held on to all my contracts to the demo day. So my initial bet of 50K already went to 200K by demo day. If I held on to everything and watched this event, ultimately I would be betting 200K on this event, even though my principal is 50, but I had 200K exposure. And that's absolutely not what I wanted to risk. I pretty much trimmed everything down that on demo day, I only have 50K exposure. The amount of exposure I wanted from the very start. I didn't increase my risk based on all the hype out there, right? Another thing I want to talk about is being proactive versus reactive. The proactive portion is where you initialize your position. That's the proactive. And the reactive is what you do when you get new pieces of information. When ARK Invest increased their position 10 days before the demo day, how does that affect the confidence on your Palantir demo day play? And when things sold off immediately after, how does that affect it? Like if we went back and this was a spike that happened when Cathie Woods bought, it tapered all the way back down to before those levels. Like this happened at $3 and tanked all the way back to $1.80. Does that affect the confidence level as well? That's when you react to certain news. Like if you reacted this way and you say, oh no, even with this Cathie Woods buying in, it couldn't boost the stock price. I'm selling off right here. I'm selling off at $1.70. I'm just taking the 10% gain and I'm getting the hell out of the play. It doesn't look good. If you did that and exactly that, then you would have missed out on all these gains right here. ultimately to the 10x. And there are different times when things tank. Say right here, it went from $8.50 all the way down to $6. That's another 30% drop. How much confidence do you have then? It's easier said than done, because if you rode it up from the $1.50 levels all the way to $6.50, even when it dropped to $5, you're still up 3x. So you have a huge buffer to play with. With this fish analogy, I bypassed the tail. The tail didn't tempt me into cashing out. Overall, I'm quite happy with all this play. Even though I missed out on this spike here, I couldn't sell over $10, $10 to $15. I missed out on all of that. That is the head portion of the fish. It's where the most gains are, but this peak right here maybe lasted like 90 minutes. And I'm not a trader. I'm not sitting by the desktop all day long. Usually I check in the morning and before market closes. That's why I missed out on the whole peak right here. But that's okay. A win's a win. A win is a win. So here is the aftermath. So all the winnings right here total to 160. So what am I doing with this? I close off all the positions. So as you can see here, the remaining is 0. What I've done with this winning is that I chopped it into 3 different parts. One part goes to my dividend portfolio, where I just set and forget. Another portion went to this SPAC portfolio. About 2 weeks ago, I started this SPAC portfolio, Special Purpose Acquisition Company. So all these companies are pretty much known as pre-IPO phase. And why I'm buying these is because of the jockeys. Buying the jockey, not the horse. The horse itself is a blank check company. But the jockeys are the biggest investors out there. The Peter Thiels, the Chamaths, the Richard Bransons, all those guys created these SPAC stocks. And so far is working out. As you can see here is up 32K from my initial bet of 100. So I'm quite happy with that. Another portion of the winnings went back into Palantir, either buying shares or making my next play. So most likely I'll update with the Palantir earnings play next week and we'll see what happens. So that's it for this video. Thanks again for watching. Remember to like and subscribe if you found any value in the video. As always, take care and I'll see you in the next one.